All right, today we're putting NIO under the microscope. And look, we're not going to talk about the headlines. We're not going to talk about the hype. Nope, we are going deep, deep into the technicals to figure out what the chart itself is telling us. So let's get right into it. So here's the million-dollar question, right? What is NIO's next move? Well, instead of just guessing, we're going to approach this like detectives. We're going to look for clues, piece together the evidence right from the price action. It all comes down to one thing. What are these charts actually saying? Okay, every good detective needs a case file, and this is ours. Let's set the scene. We're locking in the data as of February 19th, 2026. This is our starting point, the foundation for everything we're about to uncover. And boom, here's our first critical piece of evidence, $4.87. That's the price NIO was trading at. You got to remember this number because it's the anchor for our whole investigation. Everything we look at is going to revolve right around this price point. Now, this is where it gets really interesting. The overall technical score, it's a 57 out of 100. So what does that even mean? Well, think of it like a quick checkup at the doctor. It's not great, but it's not bad either. It's neutral. It tells us the stock is kind of just sitting there, perfectly balanced. Or maybe, just maybe, it's like a coiled spring building up tension for a big move. All right, so we've got the basics down. Now it's time for the fun part, decoding the clues. We're going to break down all the key indicators one by one and see what kind of story they're trying to tell us when we put it all together. And here it is, the evidence board. This table gives us a fantastic, at-a-glance look at the whole technical picture. We're going to walk through this piece by piece so we can really get what's going on under the hood. Okay, let's dive in. First up, the RSI, that's the relative strength index, is sitting at 50.8. You can think of this like a car's speedometer for momentum. And right now, it's parked right in the middle of the road, perfectly neutral. Now, look at the moving averages and the MACD. They're both giving us bullish, positive signals. These guys are all about the trend, and they're whispering that, hey, the longer-term trend might still have some legs. But, and this is a big but, look at the volume. It's below average. That is a huge question mark. Why? Because volume is conviction. It's the fuel in the tank. Without it, a big price move is just not believable. It's like an engine revving, but the car is not going anywhere. And finally, the Bollinger Bands confirm this whole story. The price is just hanging out near the middle, which tells us we're in a tight squeeze, a consolidation. It's basically just waiting for something to happen. So we've got all these clues laid out. Now what? What do we actually do with this information? Well, it really depends on your game plan. The story these charts are telling points to totally different strategies if you're a short-term trader versus a long-term investor. So let's check out the two playbooks that come out of all this. Okay, if you're a trader, listen up. Your focus has to be laser sharp right now. That 50-day moving average at $4.86, that is your line in the sand. It's absolutely critical support. And any big move, I don't care if it's up or down, has got to be backed by a big jump in volume. If not, it's probably a trap, a total fake out. Now, for you long-term investors, the view is a bit different, right? You're playing the long game. This little bit of weakness could actually be a golden opportunity to add to your position at a nice price. The signal here isn't screaming buy. It's more of a hold. It's telling you to be patient, plan your moves, don't rush them. Look, it doesn't matter if you're a trader or an investor. Risk management is everything. It's non-negotiable. And the good news is, the charts give us a super clear map of the danger zones. We've got a solid floor, our main support, way down at 440. And then we have a ceiling, the key resistance, up at 514. Just think of those two numbers as the boundaries of the playing field right now. All right, we've looked at the price, we've checked the score, we've dug into all the indicators, we even have our playbooks ready. So it's time to wrap this investigation up and give you the final verdict. And really, this is what it all boils down to. NIO is not screaming buy and it's not screaming sell. It's stuck. It's coiled up like a spring being pushed down, just waiting to pop. It's at a classic inflection point, building up all this energy for its next big move. The only problem? We just don't know which way it's going to break yet. So what's the big takeaway here? It's that this quiet period, this consolidation, is not the time to fall asleep at the wheel. No way. It's actually the opposite. This is your chance to do the homework, figure out your entry price, your exit price, get your entire plan locked and loaded. Because trust me, when this stock finally decides to move, the market is not going to wait around for you to get ready. And that pretty much wraps up our investigation. We've laid out all the evidence for you. right? We've got this neutral momentum fighting against a longer-term bullish trend, and it's all just waiting for some volume to show up and confirm the next move. We've mapped out the key price levels to watch, and we've talked about the different ways to play it. So, I'm going to turn it back over to you. You've seen the evidence. Now, what's your plan?